So I think, that's an area where we have been under-indexed traditionally, and I think, this would be right time for us to, make investments to, get growth, from these areas. So I think that would be the second piece, yeah. So I think the third piece, is, distribution, and fundamentally centered around smaller town and rural, and, parts of non-South where, even though we have traveled significantly over the years, and I think that there is still, room for us to explore more deeply. So I think the reach is going to be, reach will continue to be, a game for us in the next, 3 to 4 years, yeah. And finally, as Mithun talked about, I think, organic opportunities, which create, value, and where we are able to see that, we can, create, reasonable return for the investment we make. I think then that's something also which would form part of. So I think these are 4 pillars, which will drive the growth and profitability of the organization. Yeah. One more point on margin, which Mithun was talking about earlier, I wanted to make. Yeah. So I think there is gross margin and there is EBITDA. And what Mithun fundamentally was saying is that, our EBITDA is looking better, also because, marketing investment is less this year. But then, that reduction is also offsetting some early, business loss in the early part of the year because of COVID. But I think that, gross margins are presently under pressure. You would have seen that it's about 1% lower, in the last quarter, mainly because of commodity. So a bit of challenge will be there, over the next 3-4 months till we fully, travel on the other side. And that's something, we will know in the next 1 or 2 months, yeah, as we, attempt to pass the remaining, input cost increases to market. Yeah.
Great. Thank you, and wish you guys all the best.
Thanks.
Thank you. Before we take the next question, a reminder to the participants, please limit your questions to 2 per participant. Should you have any follow-up, we would request you to rejoin the queue, please. The next question is from the line of Aditya Bhartiya from Investec. Please go ahead.
Hi, good afternoon, Mithun. My first question is on margin expansion that we have seen from some of the non-dominant companies in the sector. So pretty much this quarter we have seen every company reporting very high margins. Even some of the newer entrants in categories have done very well. So what has really contributed to that? And it appears that it's not only the A&P expense, and consequently, do you think these margins are going to be sustainable, especially when smaller players return back?
So I think, Mithun, can I take?
Yeah. Okay, go ahead.
Sorry. Mithun, I'll take that. So 2 things, right? As Mithun was already highlighting earlier, right? All of, most of us have had, very strong growth in quarter 3. Quarter 3 was the quarter where, we have all recovered, the past backlog. And therefore, the overhead cost absorption in the quarter, is very efficient. Yeah. I think second thing, company to company, it is varying, but besides A&P, some companies have normalized their activity, and some others are having overhang of overhang of what I would say the initiatives on cost controls continuing into quarter 3. So I think these are the 2 factors which are affected. I think all companies, if you will go and look at gross margin, you would probably find that most companies will have similar impact in gross margin, where you might see 1 to 2% gross margin impact. Yeah. Because commodity has traveled into everybody, but it's the top line growth which is reflecting favorably on the EBITDA.
Sure, sir. And in that context, when we look ahead, do you think that margins that we used to see until, let's say, 2 quarters back or 3 quarters back, those should be seen as more representative margins and maybe build in slight expansion on those margins as opposed to looking at the margins that we have seen in last 2 quarters?
Mithun?
I think maybe not the current year. You can take maybe FY19 numbers, because FY20 also the last quarter was impacted. So FY19 is, when every company had a normalized margin structure. Like Ram said, we will still have issues of commodities for the next 3 to 6 months. But post that, I think two things will happen. One is price increases will be passed on. And today the commodities are at a peak, and there could be some reduction in commodities after the peak of the cycle is achieved, and then we could see some improvement in margins. So maybe yes, some slight improvement from FY19 margins is possible, and probably for most companies.
Sure, that's helpful. My second question is on revenue growth. Do you think there would have been a major element of pre-buying on account of commodity cost increases, as well as some part of benefit on account of pent-up demand? And in that context, how would you be seeing growth going forward? I understand that March last year was a complete disaster, and therefore base is favorable, especially for V-Guard, even more favorable than other companies. But how would you be looking at it January, February? What kind of growth do you think overall industry can deliver? And March obviously would be helped by weak base.
See, for V-Guard there are two reasons, why we have some, tailwinds. So one is, like you said, one of the reasons some companies, all of us have also reported these kind of numbers, is there is some level of pre-buying and pre-stocking by the trade because there is a price hike coming in the month of Jan onwards. And in some cases, even December, there was price increases. Some of us have taken some price increases in December as well. So that has also led to some increase in revenue. Having said that, we are looking to have a reasonable growth over FY19 March, because FY20 March was a washout for us. But we are hoping to, we feel that we can still grow, at a healthy pace over the FY19 numbers. I can't comment about the industry because my comments I will be, restricted to V-Guard only.
Sure. And just to add to that, Mithun, do we get any idea about how secondary sales have been? Any idea what V-Guard secondary sales could have been in third quarter?
We are tracking secondary sales. So either Ram, you want to take this? Or?
Yeah. Okay. I think no, we are tracking secondary sales, and secondary sales are favorable. Of course, there has been some amount of replenishment of inventory that has happened. As in September quarter, probably the secondary was more than primary. Okay, so to some degree, what I would say is, in December quarter, some amount of the sales has gone into inventory because of low opening inventory with trade, in our business. But just to give you sense, okay, you could, segment the portfolio into two varieties. Yeah. One would be, products which sell, which potentially, are non-seasonal in nature, right? Like, wires, switches, switchgear, or, you can take kitchen, yeah. Some of these kind of products, right? And here, you will generally see that, most companies have, grown, yeah. And then there would be seasonal products like Mithun was talking about earlier about stabilizer or inverter or to some degree even pump, right? Where you would see that, there is, YTD, there is a slight degrowth or something like that. So those, there is degrowth, right? And that's because, the summer season is the season when the sale comes, and, most of us sat out through, second half of March and, April and, middle of through to third week of May. So I think, if you keep all that in context, I think, the summer products should hopefully, come back, bit more strongly than they would normally do, with some element of, pent-up sale coming there. If one were to look at what's happening to categories which are selling, around the year, where we have seen that, the last year's sale has come back. But I think this is something, we will have to see. And again, the question is when it will materialize, whether it will materialize in March or whether it will materialize in April, May, June, and that's anybody's guess again. So I think that's how I would put it. Yeah.
Sure, sir. And
Mr. Bhartiya, so sorry to interrupt, but for any follow-up, we request you to rejoin the queue, please.
Sure.
Thank you. A reminder to the participants, in order to ensure that the management is able to address questions from all participants, please limit your questions to two per participant. The next question is from the line of Rahul Agarwal from InCred Research. Please go ahead.
Yeah, hi. Good evening, and thank you for the opportunity, and congratulations for a great set of numbers. So I had two questions. Firstly, could you elaborate on each of the segment, as in could you talk about products within each category? How did they do basically in third quarter, and how do you foresee the next 6 months going to be? For example, electronics, you can talk about maybe inverter, stabilizer going forward. Electrical, you can talk about wires and pumps, and durable, you can talk about heaters. You already said that the factory had some issues, but now it got solved. But in case of, let's say, fans and coolers, please. Thank you. That's my first question.
So I think as Ram mentioned earlier, we have to segment these products into highly, seasonal and non-seasonal. Fan although is a summer category, fan is sold throughout the year. So in the case of fan, we've actually seen pretty strong sales, right through, after we reopened. And if you look at other summer categories like inverter, pumps, stabilizers, they've all been heavily impacted because the sales were not that good obviously in the first quarter, and we missed sales from maybe March 10th to June. The summer season was effectively missed for us. So we expect quite strong growth to come back for these categories in the coming months. The other categories which are not seasonal like wires, switches, switchgear, they've all recouped their losses, so they should come back to normal trajectory. We may not see an additional sales for them because they have already recovered most of the losses, and they have started to grow for the first 9 months. So that's the way you can look at it. We are, like I mentioned, we are still seeing, see for example, to give an example, in a product category like modular switches, we have had very strong growth, but we were still not able to supply to the demand owing to shortages in raw material and our own ability to produce, because the demand is far outstripping supply. So there are these things also happening in the market. So companies with good manufacturing capability, companies which are strong and large in a particular category, can obviously feed the market better than someone like us who is very new to something like a modular switch. So you will see a lot of this playing out in the next few months.
Okay, got that. And secondly, to the earlier participant, I think Pankaj asked about how do you foresee your growth going forward on 3-4 pillars of your business. Broadly, specifically on the channel mix, if you could talk a bit more on that. I mean, I'm not really sure how much does e-commerce and model trade contribute to the overall sales, please. So if you could just specifically talk about the channel and how will you increase your reach when you talk about smaller towns and rural markets into north-south, that will really help. Thank you.
Yeah, Ram, you want to take this?
Yeah. I think see, we have a progressive expansion of retail coverage across the country, which which is an ongoing focus of the company over the years, and which is what has helped us to travel thus far, and I think that's something that we will sustain. Okay, and that's one part of it. So fundamentally, we'll be working on deepening our penetration in geographies where our reach is limited. Okay, and relatively limited, and we have been doing that, and that's something that we will continue to do. And I think every year we have some kind of a goal and target to add 5,000 to 6,000 retailers into our fold. So I think
sorry to interrupt, but could you help me, like, which areas are you talking about? Like, where are
No, basically non-south is where I'm talking about, where our reach and penetration has, opportunity to continue to grow, right? So.
But my sense was non-south, 2/3 of our distribution is already non-south, right?
No, so the kind of reach we have in south and the kind of reach we have in non-south, there is still a significant opportunity for us to grow in non-south in terms of distribution reach and in terms of number of retailers whom we are addressing. Yeah.
Okay, and anything on the channel, please?
Yeah, on the channel side, basically today, I think, e-commerce and modern retail today for us will be between, 12 to 15% of our revenue, if we exclude the, wire, right, which is not a product which that is in wire switches and switchgear, if we exclude for the remaining business, it's about, we are at about 14-15%. I think this is something we should have opportunity to grow in line with the market structure, right? And that's something that we will focus and align.
Perfect. Thank you so much. Best wishes. Thank you.
Thank you. The next question is from the line of Charanjit Singh from DSP Mutual Fund. Please go ahead.
Hello, Mr.
Yes.
Hello. Yes, sir. So first of all, congratulations on good set of numbers. There are two things which I want to understand. One is in terms of the quantum of price hikes which we would have to take across product categories in the coming months. And secondly, in terms of the inventory levels at the channel, how are they at this point of time? Do you see that restocking, starting again in the channel?
Okay, Sudarshan, you want to take this first part for price hike?
Yeah, on the price hike, there are two things. One is copper, and then there are other categories. So we don't have to worry too much about copper because pricing is dynamic. To give you an example, in Q3, the average copper prices were something like 15% over last year. For the other raw materials, I think more of that impact will flow into Q4. It varies across categories, but we will have to look at something like maybe 4 to 7%, depending on depending on how much commodity movement happens.
Okay. And so the inventory levels in the channel.
Shall I, Mithun?
Yeah.
I think channel inventory is, by and large healthy and, probably lower than our historical levels, but, by and large healthy. Some of the categories like stabilizer may be, a bit higher because, people may have, purchased, because we had a price increase and, they may have purchased, would have seen a stabilizer growth in Q3. They may have, advanced some bit of purchase, right? So, but that's not material because, Q4 is a, huge quarter for stabilizer. So in that sense, it's not material on Q4, but, but that would be going and sitting in the channel inventory, right? So there may be, in some parts of our portfolio, channel inventory is, very low. Like, if you look at water heater, if you look at kitchen, we are, in some categories, our channel inventory is, much lower than, what we should be having here.
Okay. And so lastly, in terms of, this acquisition which we have done and our thought process in terms of future, gaps which you want to fill. So if you can just, give some input on that.
Mithun?
Sorry, can you're talking about the distribution network or?
No,
just
the acquisition.
Sorry?
Yeah. The acquisition which you have done, the investment, and secondly, in terms of which are the other product gaps which you want to fill in the future.
Okay, talking about GL. Okay, Ram, you want to take this? Sorry.
Yeah, okay, yeah. So, I didn't understand the question vis-a-vis GEL. As far as the other categories are concerned, see, fundamentally, we are looking at acquisitions which will serve as a platform for our growth, right? So either they should help portfolio or they should help specific categories where we have, what I would say, capability gap or where we need, let's say, a quick ramp up. So of course, fundamentally they are going to rest in categories, where, we need, where we have made, more recent entries, right? So they will be in the durable space, they're more likely to be in the durable space, yeah. That's what we are looking at, and I'm talking about, small appliances, yeah. And as far as GEL is concerned, I think, we had already said that, the primary reason for the GEL acquisition, right, is because we feel that, it's an interesting technology which can bring the new consumer value and help us to grow the top line and bottom line of our inverter battery business, yeah. So it's a meaningful differentiation and, value that we can bring to consumer under our portfolio, yeah. There may be other applications of the technology for our other product categories, which is something that we will explore at a later stage. Yeah, once we are able to commercialize this technology for inverter battery application.
Okay. So that's all from my side. Thanks. I'll circle back in the queue.
Thank you. The next question is from the line of Sonali Salgaonkar from Jefferies. Please go ahead.
So thank you for the opportunity. So my question is about the price hikes again. What is the quantum of the price hikes that has already been taken? I mean, you mentioned 4 to 7% going ahead probably, but what has been taken and across which segments?
So I'll just give a brief intro and then I'll pass this to Sudarshan. If you look at something like wires, our average prices are something like 15 to 20% higher than what it was last year. And almost entirely it has been passed on to the market because in the case of wires, the pricing is dynamic by all branded players because of the frequent fluctuations in copper prices. Regarding other categories, Sudarshan, you want to take this?
Yeah. Ignoring wires, in what the pricing which has already been taken is on a company's average would be about 3.5%. That much would have traveled already.
Sure. So and when was this taken? In Q3 or effective Jan?
No, I'm talking about Q3.
Understand, sir. So my second question is regarding the distribution. Would it be possible to give us an approximate number of dealers categorized as South and non-South?
Maybe Sudarshan, we can share this offline. We don't have it, but the retail points total of 40,000. About 18,000 should be in South, balance non-South.
Understand. Sir, and regarding the new launches, could you spend some time talking about the new launches and in which categories? And lastly, what could be our capex?
Okay, Ram, you want to talk about the new launches?
Yeah, I think we not had any significant new launch, after water purifier.
Mr. Ramachandran, sorry to interrupt, but your audio is breaking up, sir.
Oh, okay. Can you hear me now?
Yes, sir, now it's better.
Yeah. No, I'm saying our new launches, I think the last major launch was water purifiers, and I think we launched it sometime, towards the end of September. And so, with that launch, we have got into water purification, and so I think that's the major category that we have entered, last quarter. In terms of, the other thing that we are continuing to do is we are continuing to, expand our portfolio of offerings in the kitchen space, and I think, but towards that, I think in September quarter we have got into hoods and hobs. So I think this is what we have entered in the last 6 months. I think there are no immediate plans for further new category entry. Yeah. And otherwise I think we don't have any immediate new launch which is coming up other than a few models in the fan business here.
Got it. So and this last question from my side, over the medium term, should we expect about 14 to 15% growth in the top line?
I think, we don't want to make any forward-looking statements, but, let us see because, it will be too early to make any comments because it's not that, we are fully out of the woods as far as COVID is concerned. We are still, having infections and stuff like that. So I think it is possible for India to get back to this growth, the sector to get back to this growth. I think once we have some visibility on, vaccinations and, people are able to move about freely. But as of now, what I can tell you is things are, fully back to normal on the ground. I had hinted, construction activity has really picked up in India, maybe due to lower, interest rates and all that. Definitely that is going to be a tailwind because after demonetization, really, the construction related products have suffered growth in the last 3-4 years, and they are now slowly coming back.
Got it. Thank you.
Thank you. The next question is from the line of Renu Baid from IIFL. Please go ahead.
Yeah, hi, good evening, sir. So I have two questions. First, in terms of some of the new products that we have mentioned in terms of the expansion initiative on the kitchen side. So what would be the investments that we're targeting to ramp up the distribution and reach in order to place these products in the right channel in the market? And what would be the timeline that we would be looking to actually scale up this portfolio in the next couple of years?
So with the new launches in kitchen, they've all been done with e-commerce first strategy. So we are selling them only in e-commerce, and we are having 8 to 10 company-owned dedicated service centers where we will be having trained professional servicemen who will go and install these products at consumers' home. The initial response has been very encouraging. So we are not foreseeing a huge spend as far as ramping up distribution is concerned, because we will be working with our premier partners like Flipkart and Amazon to deliver these products across the country. As far as the capex is concerned, for example, something like water purifiers, we'll be spending something like 4 to 7 crores over the next 2 years to develop platforms. The foods and hobs business and the breakfast appliances business are completely outsourced, so V-Guard does not have any investment in those. When we are large enough in those categories and when the ecosystem in India develops, at that time we will look at manufacturing them in-house.
Sure. So, and in your opening comments, you had mentioned that somewhere we have stacked up a bit of inventory also at the end of the year, just to ensure that there are no supply chain disruptions ahead of the season. So, do we still perceive that there could be some bottlenecks for our product portfolio in terms of availability of materials and supply chain? And if so, for which categories are these largely fans coolers, or could be for other product ranges as well?
So we are having supply issues in various categories. So for example, we are having shortages in ceiling fans because some of our vendors are not operating at the kind of capacity we would like them to operate. We are having shortages in modular switches and switchgear because of lack of availability of raw materials like polycarbonate and switchgear. There are some imported components which are not available in the country like it used to. We are not having enough jars in mixers, so mixer jars are made in a particular area in the country, and that area has not been producing enough jars to meet the demand. So I think across the categories there are these kind of issues. So as a proactive measure, the V-Guard used to manage with just-in-time inventory, and it used to serve us well pre-COVID. But after COVID, we realized that there are a lot of unforeseen hiccups that is going to happen in supply chains. Because something is made at some part of the world, and that has to come all the way to this country, and all those smooth running supply chains have been irrevocably broken. So there are a lot of issues, and there is also global shortage because China is consuming a lot of the items that is required to make a lot of these things. So because of all that, we have decided to increase our inventory in stages. We are still not where we would like to be. V-Guard used to have a FG inventory of something like 45 days. We will probably work with maybe 55 days till this kind of disruption comes.
Right, makes sense. And my last question is, while I think not only for you, for most of the industry, we have seen a significant market share gain from either smaller players or unorganized players in the sector. So in the next 6, 9 months, 12 months, as the economy comes back to normalcy, what comfort would you have to retain these market share gains that have been sustained, and what, in your view, could be the extra initiatives that you will have to undertake to ensure that the share gains are retained, both, especially in the rural pockets that we have?
So I think one change in behavior has been both in terms of trade and consumers. They have become very risk averse. So probably they want to deal with only reputed brands because for the sake of some 5-10% they are not willing to take any chance. So this is something that is one part of the behavior that's probably changed. The second is, like I said, there are a lot of supply chain disruptions continuing. So larger companies have better access to global and national suppliers of all these raw materials, and we are able to get them far better in terms of availability than the smaller guys. And the smaller guys also were operating their factories with migrant laborers, probably not adhering to any compliance in terms of wages and minimum wage and all that, which was their competitive advantage so far. Now they find that they are not having people to work. So these are all a mix of issues that's happening. We don't know when this will come back because we have still not seen the smaller brands resuming supply to the full. So we don't know. I can't make a comment. But there is definitely a change in consumer preference, and I don't think that will go back even post-COVID. Once they've experienced better products, they probably may not. All of them may not fully go back to the unbranded or smaller brands.
Right. So at least this time the transition from unorganized to organized looks sustainable, unlike DeMon or GST initial days.
I think some part of it is sustainable, maybe not all of it. They will definitely, some of them will come back, but I don't know some of them will be in a position to come back because they've not been able to operate properly for a long time, and some of them probably will shut shop.
Got it. Sure. Thanks so much and all the best. Thank you.
Thank you. The next question is from the line of Abhishek Tepad from DNB Asset Management. Please go ahead.
Hi, thank you. I think all my questions are answered.
Thank you. The next question is from the line of Simran Bhatia from SMC Global Securities. Please go ahead.
Yeah, thank you for giving me the opportunity. First of all, I want to know your e-commerce individually from the e-commerce. What is the percentage of your top line contribution from the e-commerce itself? Secondly, your 9 months revenue are close to 1,866 crore on the top line, and in FY20 it was close to 2,500 crores. So in the Q4, are you able to achieve the minus part of that, and and means your top line in the FY21, if you can at least guide on that. And on the margin front, I want to understand one thing, that going forward, not for the next 1 or 2 quarters, but going forward, can you give us some range in the sense that it will be close to 10 to 12% or 12 to 13%? If you can throw some light on these questions.
Yeah, Ram, you want to take this?
Okay, I think as far as e-commerce is concerned, I think in relevant categories, we would be anywhere ranging between 6 to 10%. Probably as a portfolio, let's say, if I take out products like wires, which is switchgear and pump, we don't sell on e-commerce. I think on the remaining categories, we should be doing about 6 to 7% of our revenue coming from e-commerce. That's the first question. Second question is on growth. I think normally we don't guide growth or margin, right? So normally we don't guide growth or margin. We think we think that we should be able to probably recover our growth on summer categories going forward, right? While I think the categories that are selling around the year, I think we should be able to increase our current growth rate, right? So I think on the volume and margin part, anything you would like to guide?
See, I think, like I said, we can take FY19 as the base, and we would like to come back to that 15% growth going forward. Because last year we did lose out of sales, our base is slightly affected. That's what we can say. And so far it looks like some of these tailwinds are, quite sustainable, especially the construction, slump that was there in the country for the last 4 years seems to have bottomed out, and it has started to grow. And that should provide us with some, tailwind. Because we did have, better growth in the country for construction-related products till 2016.
Sure. And sir, please, how's your how the V-Guard products are gaining acceptance in the northern state of India? Means how you are seeing the response in your products. Means if you can tell us. Means from.
Can I, Mithun? Yeah.
Yeah, please go ahead.
Yeah. So I think, our non-South business should be now between 40 to 42% of our revenue, and this is growing every year at, 2 to 3% per year, and we should be able to, expand this over the next 4 to 5 years to about 55 to 60%. Yeah. Typically, if you look at the categories that we are in, for the portfolio of categories we are in, the ratio of South to non-South should be like a 65 or 66-34, and we should be able to hit about around 55% in 3 to 4 years. Yeah. So,
Perfect.
more than that, will take time because, we have a presence of around 40 years in South, while our presence in non-South is, just about 10 years old. So.
Yes. Done. Thank you, sir. And all the best to your team.
Thank you.
Thank you. The next question is from a reminder to the participants. Anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Achal Lohade from JM Financial. Please go ahead.
Yeah. Good evening, sir. Thank you for the opportunity. My question was, if I look at the cash flow, what you have mentioned, and what we had in the first half, it appears that the cash flow for the quarter was probably around 30-40 crores. So just wanted to get some more color. What is the cash flow for third quarter with current year versus third quarter of last year? And, what is is the increase in inventory is the sole reason, and what is the extent of channel financing outstanding for December?
So I think one of the reasons for probably a little reduced cash flow is the increase in inventory because we were operating with below par inventories in the previous quarters, and we were actually losing sales and market share. And although we are not back to where we fully want to be, there is some increase in inventory. Another reason is we are also preparing for summer season, so we are also pre-building a lot of inventory for summer products like voltage stabilizers, fans, pumps, inverters, and even some of the new entrants like air coolers. So all of them are in the pre-build mode, and some of the cash would have got diverted there as well. Sudarshan, do you have the exact figures for cash flow for Q3?
I'll have to get back to you on that. Don't have it handy.
And just one clarification I needed. So you said that FY2021 are kind of impacted by several factors. FY19 is in number we can look at. Was it only pertaining to the sales, or you were talking also about the margins, because FY19 margins were pretty subdued, about 9%. So just thought of getting that clarified.
Yeah, we're talking about revenues part. I think we got structural margins should be somewhere around 10%, and like we mentioned earlier, we are working to improve that, and gradual improvement is possible over the years.
Understood. Sorry, I just wanted to get that clarification. In the fourth quarter, what is the extent of price increase we have already effected or announced since 1st of January?
Sudarshan, you want to take this?
Sorry, I didn't get that question.
How much price increase? So you talked about third quarter, what we had effected, the price increase, X of wires. How much have we announced for the for the January month? Like we have already taken for 4Q, and how much do we need to take incrementally?
Yeah, overall we will need something like 4 to 7%, depending on how the commodities move. Some actions have been taken, some are planned for February or so.
So I think, between 4 to 7 is the actual increase. Out of that, around 2.5 to 3% is already, enacted in Q3. The balance would need to be done in Q4, correct?
Yeah, no, the 4 to 7 will be further, over and above what's gone into Q3. Yeah, I think about 30% of this is, landed through some of the categories where changes happened, after January. Some of the categories have done in December, some changes in December. Some of the categories done some changes in January, and some more changes are required. So I would say that out of the outstanding, what Sudarshan range that he described, I think about 1/3 would have been landed, and remaining 2/3 has to be still acted. That should come somewhere, in February or March, and depending on how the industry moves. They are fundamentally related to categories, which have sale in summer, where at this point in time, yet the purchases have not started. Yeah.
So, just to clarify, so you said 1/3 is already taken in the third quarter. There is something we have...
No, I'm saying in the fourth quarter, about 1/3 would have been landed in January, and 2/3 is still outstanding,
So cumulatively...
And mind you, this is a moving scenario. It's a bit difficult. For example, through Jan, there have been significant, input cost increases over December. So what I'm saying is this is a changing picture. Okay.
Correct.
And so at the end of December, what we assessed, is the 4 to 7% range, on which 1/3 has been landed and 2/3 has to be landed again. Okay. And there may be some slight further increases in some categories in the month of Jan also, and they will have some impact. These are not across the board in every commodity, but it is there in some like, pig iron, stainless steel and all. Yeah.
Got it, sir. Thank you. This is very helpful. Thank you.
Question, the operational cash flow for the quarter was 45 crores.
And last year, same quarter, sir?
Last year, same quarter was 60.
Understood. Thank you so much.
Thank you. We take the next question from the line of Rahul Agarwal from InCred Research. Please go ahead.
Yeah, hi. Thanks for the follow-up. Just wanted to pick some discussion on the import side. So you said you still have some import dependence for raw material as well as finished goods. Could you elaborate a bit on this? As a company overall basis, what is the kind of import we do for raw material as well as finished goods, if any?
So we have I'll talk about finished goods first. We used to have almost 10% of products imported, 5 years back, of sales value. Today, maybe it is about 4 to 5%, and I think in the next 2-3 years it will come down to 1 or 2%, because something like kitchen, will maybe continue to import it because the ecosystem is not existing in India. It is not probably possible to manufacture it in India unless the ecosystem also moves. As far as the raw materials are concerned, our key raw material that we import is the electronic items. Again, the ecosystem is not available in India, so that's something like some 40 or about 40-50 crores worth of electronic items are probably imported every year between stabilizers and inverters. We also import dynamically some type of plastic. If the Indian vendors, sometimes do capitalize, and so to put pressure on them, we import the plastic items. And we also import copper again to put pressure on the capitalized, because in India there are very few vendors for copper as well. So wherever we feel that the Indian vendors are overpriced, we will move to import, and this is not a constant thing. It's a moving thing because sometimes Indian prices are lower, so that time the import will not be there. But something like electronics, that will continue to remain imported because we don't have a source in the country.
Got that. And you talk about manufacturing and increasing, captive capacities, in-house capacities. So going forward, my understanding is right now we are at 60-40, 60% outsourced. Broadly, 2 years out, any target here?
It will go up. Ram, you want to take this?
Sorry, I didn't catch the question on which category you were talking about, electronics?
Yeah, I'll repeat that. What I was saying was, overall on a company level, 60% of the products are currently outsourced manufactured. Is that correct?
Oh, okay. Yeah. Outsourcing.
Yeah.
I think, company has been consistently investing on building in-house manufacturing capability, and, I think early this year, we opened our fan factory for ceiling fan. And, the previous year, we added, we went into backward integration in water heaters so that, we are able to source water heaters, completely, locally, or more or less, let us say 97-98% of it locally. So, similarly, I think, we are continuously, evaluating the opportunity for us to increase, to in-source manufacturing, and wherever we have scale and wherever the economics are favorable, we are making the call to put the investment and set up our own factories here. So we should be able to bring some more categories in-house in the next 2 to 3 years here, which we will talk about as we finish our commercial evaluation, and we determine that we are going to set up the manufacturing capability for specific categories which are already not in our frame for manufacturing.
So, what we have already done in-house has gone up further. It used to be 40% a few years ago. We are now closer to 50. More further increase could happen as and when we get scale in other categories.
So any targets here, like as you said, north, south, non-south revenue mix you already shared going forward long term. Any long-term targets for manufacturing, outsourcing and in-housing? I mean, right now we are at 50-50.
It's not a question of target. It is, when is the right time to set up one manufacturing?
Yeah, I think for manufacturing something in-house, the primary important thing we need to have a scale. So any category where we have reasonable scale, let's say 150, 200 crore of revenue, those are the categories we will insource in the manufacturing. So it is difficult to keep a target per se, but from 50 I can see it going up again in the next 5 years, maybe to 60 or something like that. I think it will go up because by that time more categories will get matured enough to come in for manufacturing.
Right. Because I was thinking, during the COVID pandemic, obviously everybody faced some kind of supply issues, and hence I thought the time is right to basically decide, what kind of insourcing we can do going forward to, not get into the same trouble again. That's why I was asking. Thank you so much.
No. So we have a clear, strategy on the supply chain side. We have a clear strategy on the supply chain side. We also have a roadmap for, insourcing manufacturing. That is the first part. Second part is, we have completely reassessed our supply chain, and we have identified alternative sources for most of our categories. And we are also investing in tools so that we are able to diversify our source away from let us say a challenging environment should it come up. So I think if your question is what are we doing about our supply chain? I think obviously the challenges that we have faced in the last 6 months, they are visible to us. The consequences of that on our business are known to us, and we have a specific action plan already identified as far as de-risking sourcing is concerned. Yeah, it is very much there. So we will have alternate sources. These are identified. Yeah, and they are all being put through vendor certification so that we are in a position to be able to be independent of source. Regarding manufacturing, yes, we have a roadmap and footprint, and I think, at this stage, since these are all, if not formally decided by the organization, we would like to maintain that, this will grow in coming period. I think specific numbers, I think we will see based on the business case, and as Mithun already said, right, and the scale which is suitable for manufacturing, right.
Perfect. Appreciate that answer. Thank you so much. All the best.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Mr. Harshit Kapadia for closing comments.
Thank you, Steve. We would like to thank the management of V-Guard Industries for giving us this opportunity to host this call, and wishing you all the best for the future endeavors. We also would like to thank all the investors and analysts for joining for this call. Any closing remarks you want to say, Mithun sir?
No, I would like to thank Elara Securities and Harshit Kapadia again for hosting this call. Thank you all for your patient listening. Thank you.
Thank you, sir.
Yeah.
Thank you.
Okay, thank you.
Thank you.
Please subscribe and press the bell icon to never miss another update. Please like, share and comment.